Welcome to Money Sense, where we go beyond the numbers to help Canadians design a wealthier life. With host Brent Laux and trusted experts Kevin Hegedus and Andrew Roddick, partners at PWM Private Wealth Counsel and portfolio managers with Q Wealth. Whether you're preparing for retirement, designing tax-efficient income, or planning for future generations, financial decisions can be overwhelming. With a spotlight on pension-style investing strategies that prioritize long-term stability, Kevin, Andrew, and the PWM team will share their insights and perspectives to help you protect what you've worked a lifetime to build. Because effective financial planning should feel like laying a strong foundation. This is Money Sense.
Hello and welcome to our Money Sense program. I'm your host, Brent Laux, and we've got another very interesting program for our listeners and our viewers today. I'm joined by Kevin Hegedus, Portfolio Manager with PWM Private Wealth Counsel, and we've got a very special guest joining us on the program, Evan Shout, President and Co-Founder of Maverick Ag Limited. They're a business risk management and consulting firm focusing on insurance and data analytics. Evan also sits as the Chief Financial Officer at Hebert Grain Ventures, HGV. They're a large-scale grain and oilseed operation down in the southeast part of our province. Gentlemen, welcome to the program. And this week, I understand we're going to be discussing how strength creates planning power. And when I say strength, I'm referring to the strength of the agriculture industry and being in a position to plan from this strength and not just reacting to crisis. Before we get started, Kevin, let our listeners and viewers know a little bit more about how Evan and Maverick Ag fit into the picture with the services you provide your clients.
Yeah, for sure. Well, as you mentioned, Evan is the president, co-founder of Maverick Ag, and they specialize, in a lot of things, but in insurance and data analytics. And we've got a lot of clients actually that use Evan and his team at Maverick. And I think, with the way farming has changed over the years, I think there's more and more need to be dealing with experts in planning, in risk management, and I think Maverick definitely fills a void in that respect.
And we welcome you to the show, Evan. Nice to see your smiling face.
You betcha. Thanks for having me.
Agriculture is one of the strongest balance sheet positions that we've seen in decades. So what opportunities does that strength create for farm families today in your mind?
Well, I think the big one for me is freedom. So, I mean, we kind of run our own enterprise of what do you want to be when you grow up, right? So the strength of balance sheets has always been in the past, expansion into land, expansion into cattle or whatever that might be. And we're having a lot of more family farms that are breaking outside that box. So they're getting into family office style investing. They're getting into venture capital. They're getting into any other sort of businesses that kind of, to be fair, run with the farm, whether it's vertical or horizontal integration. So I think these are all things we haven't seen in agriculture before. And the strength of the balance sheet and the strength of land values have really pushed that narrative towards the family
Yeah,
farm.
and Evan, obviously we've seen farmland values increase significantly over the past decade or longer. I guess the question I would have is how does strong equity and working capital maybe change the kinds of decisions that families can make these days?
What I think the big one is the balance sheet and the profitability that we've seen over the last decade, especially in real estate, obviously. It's given the purchasing power back to farms. So, I mean, you look at the 1980s and where we were going in before the crash, and then you compare it to today, we are in a much different situation today when it comes to the ratios and when it comes to just the amount of equity and the amount of debt that sit on these farms. So the big one is it's allowed the farms to be in charge of their own enterprise. And these are multi-million dollar businesses. I mean, I don't have a client that's not one of the top 1% richest in Canada, to be fair, when it comes to the definition of investment. But it just puts them in that different realm of they're talking people now. They're talking human resources. They're not just talking production. And I mean, historically in agriculture was you grow a crop, you take it off. That's kind of where it ends. Now the discussions are much more diverse and complex. And to be fair, it's almost been like they've created monsters for the next generation, which is a whole different discussion when we talk about transition and succession, right?
And we know that producers, of course, operate in uncertainty every season. From a business perspective, Evan, what separates farms that navigate uncertainty well from those that tend to struggle?
Well, I think the biggest one's probably opportunity and possibility, right? So the farms that we work with have strong balance sheets, but they also know their numbers. And that's part of where agriculture's honestly had a bit of a weakness in the past is the farms today, because of the size, because of the complexity, they need to know where they're at any point during the year because you don't know when those opportunities come. So it's given the next, let's call it ideation or the next generation, a much different skill set. And it, like I said, it's not just production anymore. They've got MBAs, they've got CPAs, their advisor group is much larger. So they're getting way more advice coming in about the complexities and they're no longer in charge of everything. Like I said, these guys are growing teams. They have different specialties in different areas. So it's just created that multi-million dollar business enterprise as a side to the lifestyle we're so used to in agriculture.
And for many producers, the land represents not only business but also their legacy for their family. So, how should families think about protecting that legacy while still creating flexibility for that next generation coming up?
I think there's a few aspects here, and part of it is when we talk about legacy these days, we're trying to get farms to think of the legacy as the family and not necessarily just the land. And why we do it that way is we got to remember that a very small number of the next generation will actually come back to the family farm. I mean, the statistics are rather low for that younger generation in agriculture. So it's can the land and can the farm be utilized to create other opportunities for the family, not just for the farm itself. I mean, there's always that emotional attachment to the home quarter, but we're starting to see land traded almost as a commodity now for a return, which in the past that hasn't been. It was almost a sin to sell land, to be fair. And now guys are more operating it on that return on investment standpoint, just whether that comes with the financial acumen. And what that means for family farms is it means these are going to be multi-generational family offices. They're going to outlive multiple generations. And in the past, it's kind of been you either decide to sell, so you're either built to sell or you're essentially built for the next generation. And now there's other options. And it's how do we utilize all this equity and all this wealth to invest in whatever the family enterprise wants to do?
Yeah, it's a good point. And, I think another thing, and I see this all the time, emotions, right? And whether you're selling, renting, or you're doing the transition, and even when we have different family members in the business versus out of that business. And I guess the question would be, where do you see farm families encounter maybe some of the most friction when it comes to those transition discussions and decisions being made? I guess, where do they begin?
Yeah, and I think part of it is just they need to begin. And I know what I mean by that is, I mean, the 21 census data says about 12% of these farms actually have a true plan in place. And I think that's probably a little larger when it comes to number of acres, but when you talk about number of farms, there's a very small percentage that have even had those conversations. And when we're dealing with clients, it comes back to we got to start getting comfortable having uncomfortable conversations. And that's where it leads. And whether that's the outgoing generation that wants to hold on to their purpose and they want to be part of it. And I mean, they probably have never seen anything else outside the farm, where you've got a new generation that has different passions, different work-life balance discussions. I mean, they don't see hours as success. They see different ideas of where their success can be. I think that's where the communication needs to come together. And part of it is they just need to sit down and figure out what is the future of the farm look like? Because I think we're used to that old sweat equity discussion of, you know what, when I'm gone, this will be left to you, so don't worry about it today. And I don't think you can have those conversations anymore. Now it's, I've got 17 and 18-year-olds sitting in on banking meetings now. Like the generations that are actually doing the succession correctly, they're getting them involved in all the discussions. So they see these monsters and they see the complexity that comes with the finance side. And they actually can make a decision whether not just I'm going back to the farm, it's do I want to go back to the farm? Because we know a lot of these enterprises aren't set up in a position that maybe you're comfortable with. And I think that's where the biggest shift I've seen in the last few years is that next generation is starting to ask if they should even be involved, where in the past it was just, I'm a farmer, I'm going back. And so it's opening up good discussion on how do we build these so that you can come back and maybe you're not CEO, maybe you're an agronomist, or maybe you're part of the marketing team, and scale and consolidations allowed a lot of farms to have these new roles. So it's not necessarily I'm coming back to run the farm, I'm just coming back to be part of it.
Evan, earlier in the show, you talked about some of the mixed investing that you're seeing a lot of these farm operations get involved with, uh, outside capital, land, all kinds of operations. So what kind of a healthy balance, what would that look like in your view?
Well, I think most farms still, I mean, they start with the land because that's the safe investment. And I know that we've heard some conversations that maybe land isn't as safe as we always thought it was. I'm still of the opinion that it's safe. So I think that's the start of your portfolio is having that backing with the inflationary hedge. You can't make more of it. It's just the base. And then obviously from that point on, when we start talking succession and transition, the farms that we're seeing have less confrontation are the ones who've actually taken some of their money and invested it outside the farm, whether that's in the usual tax saving RSPs, TFSAs, that sort of thing, or venture capital or other businesses, and they have that nest egg already outside the farm. So when it comes to succession, they're not drawing a whole bunch of capital out of the operation and making the next generation buy it. Because we all know that if the next generation has to buy it off of them, it's not going to happen. I mean, the prices are too high. Um, the other side of it is, I think, just like I said, we're starting to see diversification, and whether that's in investments, whether that's in life insurance, whether that's in different business segments, it's a risk mitigation tactic today. I mean, we've all seen where commodity prices have gone. We've all seen drought versus floods. I mean, there's a lot of uncontrollable, or like we like to call them uncontrollable risks in agriculture. And I think just having that diverse portfolio, no different than your wealth management side, Kevin, is just how do you structure that? And for us, it's the base is the land, and anything outside of that is how do we limit the risk mitigation for everything else.
So let's talk, if we could, Evan, how can off-farm capital complement long-term land ownership without really disrupting it?
I think we're starting to see guys utilize their land borrowings, not necessarily in acres. I mean, expansion into acres this day is getting harder to pencil from an agriculture standpoint. So what they're doing is they're essentially using their land to fund other outside investments. And whether that's a retirement fund, whether that's life insurance for tax planning, whether that's just outside businesses, we're having those discussions more and more of how they can utilize their on-farm assets to get that diversification, and whether that makes it easier on the next generation for not having to put out as much capital, or it makes it easier for the non-farming sibling discussion. I mean, we've got lots of farm families that have multiple next generation and only one's coming back to the farm. How do we get capital out in advance of this plan rather than just waiting till the estate, and all of a sudden the farming child has to figure out how he has to buy out multiple other heirs, right?
I'll share a quick story with you before I ask you the next question. So I had a meeting. This was, I think, in November, and there were first time people that came in. They brought in three children, two sons and a daughter. I automatically thought that the boys were going to take over the farm, right? It was the daughter. So pretty cool, after all these years meeting with farm families, to see that here was a young lady that was taking over that business. And, over the last 30 years, I've built, thousands of financial plans for people. And obviously they deal with investing in savings and taxes and insurance. And a big part of it, at some point, everyone's going to retire. All of us on this podcast, we're going to retire at some point. So if the farm family is financially strong right now, Evan, what conversations, again, should they be having um, before, I guess, some of those circumstances kind of take hold? Someone passes away or something happens that forces you into making a decision.
Well, it's funny because we've always made the joke is if any of us did been to a retirement party for a farmer, right? And the answer is it's called a funeral, to be fair. So when we put it that way, I mean, for us, when we do some of the further out succession planning, it's based on the 4 Ds, and you mentioned it, Kevin. It's we have to look at death, disability, departure, and divorce, and those are the four that can really put a negative within the succession and planning side of it. And we're seeing more and more of it today. I mean, there's a lot of wealth in agriculture, so we're seeing a lot more confrontational when it comes to. I mean, in the U.S., divorce is one of the biggest land transfer reasons right now. And then when we look at some of the death and disability, I mean, we're in the second most dangerous industry in the world, to be fair. That's where agriculture fits. So we have to have those discussions. And I think what's happening is we may not be getting further on the succession, number of successions done, but the discussions we are having with the clients that are doing it, we're getting it right. And what I mean by that is we're putting those in the agreements. We're having those uncomfortable conversations because nobody likes talking about death and disability in the state. But it has to happen because we're not dealing with the small family farm anymore. I mean, consolidation, if you're over 160 acres, you are a consolidated farm, whether you like that term or not. So it comes back to the fact that these are 1% richest entrepreneurs in the world. And if we don't start having these discussions earlier and talking about what ifs, it's going to be bad for agriculture, not just the family farm. It's just going to be bad for agriculture in general.
Evan, you're going to be one of the featured speakers at PWM's Life After Harvest events. From your perspective, why are these kind of events important right now for our Saskatchewan farm families?
Well, I think part of it, I mean, we know the statistics. That's the first one. But the other one is getting education and getting, good advisors up at the front of the room and giving their opinions. And Kevin and I know, like, we're not all going to agree, and we got different views when it comes to land and dollars. But it's for the family farms to sit there and listen and decide what success is for their own operation. Because I don't have one farm that's identical to any other farm. So they each have their own definitions of what success look like. It might be more time, it might be more money, it might be relationships. But the big one I find is these events. It's just getting information in front of them, which farms are usually rugged individualists. They never leave the farm. They love what they do, but they don't get a lot of exposure. This is just giving another line of exposure, another line of learning to the family farms.
And in just a minute or two here, we'll give you some details about the Life After Harvest events that are fast approaching here. Evan, just some final thoughts before we wrap up our show today.
I think the big one for me is, I mean, we all know how we got here, right? I mean, agriculture has been through and through one of the best industries in the world. I'm lucky to be in it. I'm lucky to have been a farmer at one time, and now I'm back farming again as a part of a consolidated operation. But the big one is it's a lifestyle, but if we treat it like a lifestyle, it's not a real good business. And the line is, if you treat it like a business, it's a great lifestyle. So I think we're getting that message across as best we can of, you need to start having these meetings that any other industry is already having. We just need to pull agriculture forward as fast as we can.
Kevin Hegedus, final comments from
Yeah,
you?
I couldn't agree more. And I think these events also, what I love about it is you get families there, right? And if you get mom and dad and the kids in the same room, that helps start the dialogue. And Evan said it earlier, right? You got to have that conversation. It's got to start somewhere. So super happy to be doing these events again. We're going to be in Prince Albert on March 6th. That's a Friday afternoon, starts at 4 p.m. And then the next morning, we're going to be in Saskatoon at 9 a.m. So yeah, give the office a call, 306-975-9500, or you can text that line as well, or you can register at pwmprivatewealth.com. And Evan, I want to say thank you for being on the show today. And I'm super excited about having you speak and actually having a chance to meet you in person as well.
You betcha. No, I appreciate it.
And Kevin, for any of our listeners or viewers or clients interested in finding out more, discussing their portfolios, other financial matters, making a plan for the farm succession, how do they reach out?
Yeah, if someone wants to take us up on that and book a consultation, easiest way is to go to our website, pwmprivatewealth.com. But also, if you like the show and you like listening to some of these topics, or you want to hear some different topics, go to Spotify and you can check off that you like the show. Also, if there's any topics that you'd like us to discuss in the future, we'd be happy to bring that forward and bring it on the air and have that discussion as well.
Once again, find out more at their website, pwmprivatewealth.com, office number 306-975-9500. Again, Evan Shout, thanks so much for joining us today on our Money Sense program.
Thank you for joining us for Money Sense, where we explore meaningful conversations about money, life, and the choices that shape them both. At PWM Private Wealth Counsel, they're here to help you build a life as solid as the financial plan they've built for you. And most importantly, give you the confidence to know you're going to be okay. Financial planning services are offered through PWM Private Wealth Counsel. Portfolio management services are provided by Q Wealth, a registered portfolio manager, investment fund manager, and exempt market dealer. PWM Private Wealth Counsel is an owner and partner in the Q Wealth Partnership, where money meets meaning.